Good morning. It's Paul Georgie from Allendale. It's November 11th, Veterans Day, and first of all, we want to thank our veterans and the families that support them because we really appreciate what they do for us here in the United States. In the markets this morning, we've seen grain markets do a little bit of firming up since the early trade. The big focus, I believe, is on the wintry storm that is moving across the northern portion of the Midwest, which is supposed to drop quite a bit of snow across Dakotas, Minnesota, Wisconsin here over the next 48 hours. And that's got trade a bit excited as the USDA release yesterday, harvest progress 80% on corn. That compares to an 81% average, so pretty much in line there. Soybean harvest at 90% versus a 91% average. The majority, or the states that are the most behind on harvest, is Wisconsin and Michigan. So that's an area that is expected to get some snow. It shouldn't have a great impact on the total production, but it is enough to create some headlines and create some support here this morning. Another factor that is the trade's looking at and have been watching for several weeks now is the soybean meal basis, the demand for soybean meal, and the soybean meal spreads. We see this morning where December contract of meal is gaining on the deferreds again. That is providing some support to the nearby soybeans as the crush margins are off the charts on the upside as the because of the demand that we've got, the lack of movement of soybeans, and creating some the logistic problems that's facing processors is also helping support this excellent margin right now. However, when you look past the first of the year into March, May time period, the profit margin drops about half of what it is right now. So it gets back to a normal state very quickly. So we'll be watching that closely and watching the spreads to give us an idea when this market may have maybe seen its top in here. Another fact, I think, is the trade has underestimated the farmer's ability to store this large crop. The bins were empty. Farmers are filling the bins and then finding a lot of places to store the crop, as they just don't want to sell it at the cheap prices, and that is certainly impacting the basis and demand that we've seen at the cash level here over the last couple weeks. The Chinese market, soybeans there continue to drift lower. They're down 19 cents on the week just in 2 days. We've also got technical actions here in the soybeans yesterday where we had a higher price and then sold off, closed lower yesterday. That's going to be watched closely today. If we get another lower close today, you could see some liquidation, some profit taking by longs as we get a negative technical signal. So watch that as we go forward here today as well. In the livestock, cash markets are quiet in the cattle. There really isn't any bids at this point in time. Offers are somewhere in the 169 to 70 range for live, 269 to 270 for the dress trade. The packers reducing the slaughter level last week and this week is supporting beef prices, and we're seeing the packer margins improve a bit. Yesterday we were running at about $120 a head in the red. With today's calculations, it comes out to be around $99 in the red. Still not a very good situation for the packers, and they're resisting that by not willing to pay up for cattle, even though we've got tight supplies. The biggest problem that we've got in the meat complex right now is the competition between meats. We've got tight supplies of beef, which is creating high prices. The pork complex, however, is seeing a larger number of hog go to market and be slaughtered, therefore producing more pork. We're within 1% last week of a year ago. So we've got plentiful supplies of competitive meats at the retail counter, and we're also going into a holiday where we will see competition for counter space as turkey and hams take over the spotlight. In the livestock markets, we'd have to expect that we would call the markets steady to a little higher here this morning, just because of the attitude of the overall commodity complex. The dollar continues to work higher, and crude oil continues to work lower. So those are also leading indicators that we may look at to give us some idea where these markets will go. So stay in touch with the Allendale Research and your Allendale brokers. We'll be happy to answer any questions that you might have. You can reach us at 800-262-7538. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.